Welcome to the Wealth Roundtable, where we have conversations with leaders that are shaping the future of wealth. My name is Prisca, and I'll be your host. You've had an interesting, non-traditional path. So how about you tell us about yourself and what led you to options trading?
My journey was a little, well, as you said, is atraditional. I came out of undergrad having studied math and physics, which doesn't sound like a bad intro to finance, but ended up being a software developer for a while and got bored of sitting in a cubicle. And so I joined the Peace Corps and taught math in a rural village in Nepal, just a little south and east of Everest. And and it kind of got me hooked on this idea of living kind of well, I guess adventure really is the way I would say it. And so early in my life, adventure meant living in Nepal, and I went to grad school. I lived and taught in India for a little while. Went to grad school, lived in Nigeria. Um, from there, we moved to India. I started a social enterprise in India, and that was kind of where adventure transitioned a little bit away from like being in foreign countries to doing cool stuff. And so I was running around rooftops in rural India, laying electrical lines, trying to electrify, as much of rural India as I could. Obviously, I wasn't going to do it myself. We had a whole team of people who could do it way better than me. But those first few times, it was fun. Hopping from roof to roof. Then built this social enterprise up, raised equity, raised venture capital, and had a decent run. We hit a lot of challenges along the way. I'd say some differences in opinion as to how to proceed with the company. Ultimately, the company didn't last. Was around for about 10 years before it folded in the pandemic. So just wasn't stable enough to survive the pandemic. But I had previously started working in finance anyway as a registered as an investment advisor. A colleague of mine and I had started an investment advisory that was focused on endowments and foundations. So that was my intro into finance. And along the way, I was really studying options at some point because I thought options would be able to give us a sense of where the market really, where the kind of the distribution of investors, what that distribution of investors thought the market was going to do over the next 3 6 months. And I think a lot of people have thought they could derive that information out of options, and it's not nearly as easy as one might think. It's a still eludes us. It's the holy grail of options math, I suppose. But it was interesting, and it was an interesting assignment, and for me, to look at options and realize that there was this other instrument out there, and by doing enough work on it, realizing that actually the risk return profile of options investing can be better than stock investing, and so that was basically my intro into options and why I'm where I am today. Managing, we just started Titan Strategic Income Fund and Options Fund on August 1. So what we're looking at 7 weeks right now. So still a young one there, but off to a good start and excited about the future.
Oh, that's really exciting. Yeah, like you mentioned, options is it's a little difficult. When I was an when I was an active trader, it's one of the parts of my job that I did not enjoy. If I could be
Yeah.
frank, I did not enjoy that part at all. And then I also had a lot of clients that lost a lot of money
Yes.
options trading.
Oh yeah.
Right when the market opens, we get on till 7:30 to 2, and it's just the
Right.
grind, the grind, the grind.
Yeah.
You see so many people lose so much money trying to understand, trying to work things out, trying to strategize. It really is pretty difficult. A lot of people don't really understand it, and if it's kind of just like math too. If you don't practice it, you lose it,
Yeah.
right? And since I've stopped active trading, I've also lost I've lost my knowledge on that as well. So why do you think options remain so underutilized?
Yeah, I think it is for some of the reasons you just mentioned. One is that the payoff of a call and a put You can take four different positions with options. You can take a buy or sell on a call or a put. So that's two, twice as many options as you have with stocks. You can either long or short a stock. Um, so that adds a little bit of complexity, but the payoff diagrams are um, they require you to account for more information. You have to look at the the how the underlying is moving. You have to look at the strike price of your option. You have to look at the premium you've sold it for, and if you're not waiting till expiration, that premium can fluctuate even if the underlying stock does not. And so there's a lot going on there, and it can be confusing if it's kind of like I see it as a lot of noise. If you can focus on the two or three things that are really important with your position and just focus on that, I think it makes it a lot easier, but it is harder to do that sometimes. And the other thing I think is that, exactly as you said, if you don't know what you're doing, and if you were saying, if you sat there and said, "Yeah, I've got $100,000, let me invest it, let me buy $100,000 worth of calls." I mean, you can be broke in a matter of weeks, right? Which doesn't happen in stocks. If you buy $100,000 in stocks, it'll be worth something in 3 weeks. Even if if you get hit bad, it'll still be worth something. And so I don't think people really realize what it is they're doing when they're buying options, and also don't know whether they should be buying or selling options. And I think that degree of education. That's really kind of what I'm most excited about doing right now, is trying to share that information with people so that they can make better decisions. And not only make better decisions, but to start with, just not be afraid of them. Because it is something that I think people have heard so many horror stories with, and to know that you don't have to be one of those victims, you can make better decisions. I think all that's really what I want to reach out to people with.
Perfect. Yeah, I've always thought, I don't know if I'm right on this or not. I'm sure I'm wrong, but I've always thought of options as educated gambling, right? If you know what you're doing and you have the education, then you can make a lot of money with it. Versus if you don't, you get to lose a lot of money. You get to lose a lot of money. So kind of very similar to gambling, but with education and stocks and the stock market.
I think there are a lot of investors who do exactly that. They are gamblers who believe they know better than the rest of the market and can find a potential payoff that's a positive expected return, in that they have a better sense of what's going to happen than the price of an option would indicate. I personally I see that, and it seems immediately obvious when you learn about options. It's very obvious that you can use them in that way. I personally don't like using them that way. I don't like using them that way because doing so relies on being right. And if you're wrong, and to be honest, even the good people are wrong about as often as times as they're right, um, then you're losing as often as you're winning, and you're not getting an expected return. And so when I look at stocks, look, you don't have to be a great stock picker to make money in stocks, right? You can, as long as you're putting money in the market, whether you've picked the best index or the best stock, the chances are your money is going to grow. Maybe it won't grow as much as the S&P 500 if you've picked some other stocks, but chances are it's going to grow.
Yeah.
And what I want people to think about with options is that you can do the same thing. You can take a position that has an expectation of generating a positive return, but you just have to know where those are. And it takes I guess it just starts with a philosophy about options, how they're priced, and why people are buying them. And if you're orienting yourself towards the portion of that options market where you need to be right to win, instead of you have to be patient to win, then if in my opinion, you're simply not going to make as much money. But if you're willing to take on positions that have an expectation, or a strategy that has an expectation over time to generate a positive return, even if you aren't right on a specific forecast, that's really where I think they fit into portfolios.
Okay. Perfect. And when you said previously you did You were an advisor before you transitioned into options. Okay, so you were also trading options when you were an advisor, or?
No, I was
No,
looking at options really. We were that investment advisory still exists, and I still participate in it. But what we had a mathematical model that would allocate funds across a number of different asset classes based on our forecasts. So we'd forecast the return of the U.S. Of U.S. large cap, U.S. small cap, European equities, etc., through fixed income, a few alternatives. And so we generate about 16 asset classes that we were willing to invest in, and we use forecasts to kind of help us decide how much to allocate into each one. Um, and it was not just forecasts; it was also measures of risk and covariance and so on that we built a custom optimizer that we use to help allocate. But the forecasts are really a critical part of that process, and so the start was um, let us see if we can figure out what the market expects the return to be, and see if we can take that as a starting point and see if we agree with it. Um, and there's different ways to do it. There's the capital asset pricing model, which is one way. I just don't believe it. It's a very good way. But options seem like a really, really tremendous opportunity to say I can find options that expire in 3 months. And so if I'm looking at a 3 month forecast, that product should have a lot of that information built into it. And not only are there options that expire in 3 months, but there might be 100 of them at different strike prices. So all of that information should be, all those prices should help me gather information about what the market's expectation is. And so that was what led me into using options more so as an indicator, not as much as an investment instrument.
Hmm, perfect. And this would be a perfect segue into, is this why you wrote your book?
I wrote the book because I think you touched upon this earlier that there's this sense of what options are and their sense that they're educated gambling, and I think if you're a less experienced investor, educated gambling doesn't sound like what you should be doing,
Yeah.
and I would discourage anyone from doing educated gambling if they're really trying to make money. Um, and so I wrote the book because I wanted to explain what options were as clearly as I could so that an investor who wasn't familiar with it would come in with some knowledge, um, but also would have a philosophy that would allow them to know what types of positions would be inclined to make money. And if they're doing something more complicated, being able to break it up into this portion is inclined to make money. I don't necessarily need to be right on this portion. This portion of the trade is because I think something's going to happen and I have to be right for that to work out. And so if you can break it out, if you can break your trades out and just identify where you're inclined to make money, I think that makes it easier just to focus on the types of trades that will add value to your portfolio, whether you're without having to be right.
Mhm, perfect. So you mainly wrote it for education of just the
Absolutely.
people around you.
Yes,
Yeah, yeah.
absolutely.
And can you tell us a little bit more about Titan strategy income?
Yeah, the idea. So the philosophy here was with my strategy is that selling puts is the type is the side of the of options trading where you're inclined to make money. You don't have to be right. You can particularly selling out of the money puts, which means selling puts that don't have value unless the stock price falls significantly. And so if you can find those, if you can focus on those positions, even if the market declines, you're still going to make money. If the market goes up, you're making money. There are obviously going to be situations where they won't make money, but you're trying to create a pretty wide range of outcomes where a trade you're making is contributing positive to your portfolio and doing so in a relatively low risk fashion. And so that's the underlying philosophy of and I can get into why those positions I think make money and others don't, depending on how much time you want to talk about it. But the but that's essentially throughout all my work, that's where I landed. Is that selling puts is expected to make money, and that if you can be selective, you can even increase the amount of money, thereby increasing the return for the element of risk you're taking. And so that's what we do at Titan Strategic Income is we have a basket of stocks that we track, and we're looking to sell puts on those stocks. Those stocks have been selected based on quality measures of if you're value investor type metrics, price to earnings, return on equity, etc. Companies that we think are well valued, are attractively valued. So that means that the price is unlikely to decline further, at least significantly. And then if we can sell puts on those, we're particularly out of the money puts, we've got relatively safe assets with a cushion by selecting an out of the money strike price, and we're looking for the most attractive premiums in there. And so that the idea is to generate a double-digit return with relatively low risk through options on these underlying assets.
That's awesome. And I'm assuming that you actually cover selling puts heavily in the book as well for our listeners.
I do cover selling puts. After I go through the lengthy section of the book where going through what calls and puts are and the basic things to know about them, the next section is a section on philosophy and why I sell puts. And to be honest, I the book is out there. If a reader is willing to go through it, I hope will set people up to begin trading puts on their own as well. And so it isn't necessarily to drive investors to our fund, but it is to educate people and help them if they decide they're going to do this on their own, to help them do it well.
Okay. So it is mainly for investors and not advisors. Is that right?
Yeah, I think so. I think if you're going to do this professionally as an advisor, then I think there's a degree of sophistication, software investment that you need to make into it. If you're an investor looking to understand them, to know why and when to allocate some of your clients' money towards options funds, I think that makes sense. But I wouldn't look to this as a tool for an advisor to get into options trading themselves.
Okay. Yeah. In my personal experience, I haven't really seen any advisor trading options
Yeah,
at all. I
yeah.
don't know if you have on your end.
No, I mean, we've done it pretty rarely, and I've seen people use long call positions to protect a position that they might have in their portfolio, but they're rare, and to be honest, those types of positions tend to lose money, so people shy away from them, in the long run. But on a case by case scenario, sometimes I think advisors may add a put onto their portfolio for protective measures, but I think it's pretty rare.
Yeah, I think so too. And just to segue here, I know the world right now is talking about AI. It's everywhere right now. Every
Yeah.
industry is adopting AI. In your opinion, what role should AI play or shouldn't play in strategies for options?
Yeah, I think when we talk about AI, there's a tendency to think of the large language models, the LLMs. And those are, I mean, they're incredible. We've all used them and mind-blowing in what they can do. But in terms of um, but I think machine learning, the not the correspondence skill set that Gemini and ChatGPT have, but the ability of machine learning to take a large amount of data and synthesize it into through complex neural networks or other um, function trees to come up with an algorithm for selecting a trade. I think that's really interesting, but I would still say I'm cautionary on this in that optimization techniques have a risk of coming up with or identifying false positives,
Mhm.
identifying a scenario or an algorithm that works on past data, but not forward looking. And there's really there's a lot of things that people can do to try and avoid that. You take an out of sample test, but at the speed at which computers can train and optimize these algorithms, they can run a test on your full set of data, come up with what looks like a good algorithm, test it on the sample out of sample data, and iterate so many times that even what comes out of your out of sample data testing can still be a false positive. Just the sheer number of iterations that these computers can do. And so I'm very cautionary on using machine learning algorithms that aren't still rooted in theory. I think it's important to fully believe that have a at least a theory or an understanding of why an algorithm works before you go off and deploy it. It's great to get that confirmation, but I think that if you run a test and figure out that the number of pancakes you had in the morning is going to drive the price of Nvidia, maybe that's exactly what your algorithm finds. I think we know there is no correlation. And so if there is a correlation the machine has found, that's a false positive. And those false positives can exist and are easy to make their way into your solution. So I'm cautionary, but I think it's really the amazing ability of compute to help us answer complex problems that's really exciting.
So are you saying that AI shouldn't even be used for, let's say, or it shouldn't be influencing, let's say, research or even pricing models or anything like that?
I think it's going to integrate into everything we do.
Yeah.
And so at this point, I wouldn't hand anything over to an AI or an AI agent, but I think being able to use AI and AI agents to do a portion of the work is incredibly powerful. Again, like anything we do, I think we just need to have ways to test and confirm that what we're getting as a result is quality.
Mhm. And I know Titan Strategy Income, that's you guys are pretty new, starting something super exciting. Congratulations on that, by the way.
Thanks.
Um, in the next 12 months, where do you see the business going? Or what are you guys trying to accomplish?
Yeah, I think at the initial stages, we're trying to um, we're trying to establish a good track record, make sure our processes are all finalized. We are looking to automate the trading, um, and as machine learning can help us improve that process, we're looking to do that. But I think it's also a lot of outreach, and that's what the ability. One thing that having an eclectic background like mine, um, one way it's a significant disadvantage in this market is that when I want to go out and reach out to potential clients, I don't have that Rolodex, right? And I think that's probably something you've seen over years is you probably do have that Rolodex. You have those contacts, even if it's not directly with a potential client, it's with somebody who might have those contacts, or it's with somebody who can you've worked with in the past in this field that can vouch for you, and that's an incredible um, tool, and something I'm sure you've seen has been beneficial to you. Um, but I don't, I'm in a disadvantage in that sense, and so for that reason, being able to reach out to clients, potential clients, in a more strategic way, I think that's really uh, going to be the bigger challenge for me. I think the investment side is solid. We've got a path forward to automation. We've got the algorithms, got the math down, but it's reaching out to clients and building the fund that is the challenge. And so, I think that's something where AI is actually has tremendous potential value, and I'd be curious to hear what you think, having started an AI company that may be solving that problem, where you think AI is going to be fitting into this industry.
Yeah, I I'll love to chat more about that at the end of our
Sure.
um, podcast for sure. But with the conversations happening right now, a lot of people keep talking about, oh, AI bubble. There's an AI bubble. So my ears are on the ground
Yeah,
on that. But I definitely think right now it's, like you said, is being integrated in our lives, in our work, in everything we do right now. So I don't know about a bubble, but I do know that everything we do moving forward will include AI for
I
sure.
believe that 100%. Yes.
Yeah. And Nikhil, if someone is trying to connect with you, they're trying to have a conversation, they're looking for your company, they're looking for your book, where do they find you? Where do they find your company? Where do they find your book?
Well, thank you for allowing me to plug the company in the book.
Yes.
You can you can find more about the fund at titanstrategicincome.com, and you can find the book for download at titanstrategicincome.com/book. Hopefully
Okay.
that's easy to remember. The book is a short book, about 100 pages, large font, small page size. So try to make it easy to read. It does cover complicated topics, so maybe not the best thing to read right before bed. But I hope I would love to get input as well from people if they think that there are some sections that could be written clear. I'd love that input. But generally, it's out there for education purposes, and I hope people enjoy it.
Perfect. Thank you so much for joining the conversation. I really appreciate it.